based on what we see, we'll try to do a comparison between the daily and the intraday, so we can get the feeling for the close and actually make our analysis properly. Okay. So like every time we start with the US dollar, and based on the index that I have here on my daily chart, it says it had closed the week at 75.51, and it shows the date as the 8th, so I'm assuming that this is the right close. Does any of you that has e-signal or something has a different close for the index? I'm assuming this is the right close, pretty much it's the right close. Now, the one thing I want you guys to keep an eye on, and this is really quite interesting. I mean, if you take a look at this area over here, I mean, from April 2008, we have been creating this, if you want to see this, one high, a lower high, and a lower high, and it's really kind of narrowing, contracting, and we're trying to make lower lows, so it's getting to those stages. I mean, you can see it over here on the weekly chart. It is forming, it is not usually after a big downtrend, it gets into this sideways pattern, and it starts making failure to make lower lows, failure to make highs. It gets to be boring kind of trading and narrowing, contracting, and as you remember, this is the mindset when the market begins to change its bias to the upside, and that's why it has been extremely difficult trading the US dollar from a long-term perspective, i.e. buying or taking a position, because you buy it even though it gets above a structure point, it just flips and it turns back around. And this has been the last setup, if you will, for the last 45 days, and you can see it here. It's like one big triangle inside another triangle inside another triangle, and one inside the other, one inside the other, and it is just coiling and coiling and coiling, and it should burst into one direction. Now, is this direction to the upside or to the downside? Well, the trend is still down. The bias is to the downside, even though we are getting now some moves close above the 75. It is closing at it. So this, in essence, I mean, the way I have to look at it, as this is a kind of a positive close for the dollar, even though it crashed on Friday versus the Swiss franc. Look at the crash we had on the Swiss franc, the same kind of crash we had on the Japanese yen. We had some also a big move to the upside, or for the pound dollar. I mean, this seems to be complete. So the pound dollar came back about 100 pips right above the 159.80, took us about 50 pips, so we had a crash in that too. You can see also we had a kind of a small push. I mean, in the euro is again as weak as it can be, so you got this kind of volatility in the euro. It just sold off, the dollar sold off, or the euro rallied, only for it to turn around and come back down again. So we had on Friday, just on Friday, that weakness. But even though with all the weakness that we had so far on Friday, we still were able to close based on the index at 75.51. As you know, the dollar index is a basket against a lot of currencies, so it's not particularly against. So it shows the cross section of the dollar that with this, with a close above 75, that is an indication that there is some buying coming in still into the dollar, believe it or not, and we're getting those knee-jerk reactions that appearing into the dollar because of the uncertainty that's going on in the United States with the hold on a second. Thanks, Kevin. Thank you very much, Kevin. I had somebody able to come in and fix it, so I appreciate it, Kevin. Thank you very much. Thank you. Okay. So with this, guys, we can see that now there is some buying coming into the dollar. If you look at the two strongest currencies so far that are resiliently strong is the Japanese yen. You can see the big reversal that we had on Friday in the yen, even though we're still below the 124.78, so we're still 70 points below the structure point. But you can see that even though with all what's going on in Japan, and the yen is quite strong, the same strength you can see in the Swiss franc. The gold has also turned around and give us a good push. It came back above the 115.11 a couple of days ago, which, if you remember from last week, I mean, we said that was the structure point. Coming above it, now you had about $30 move to the upside upon the reversal of gold back above the 15.11. You can see also copper had quite an excellent move in the last couple of days, in the last week or so, and the one that has not yet moved is the silver. Something else that is also quite interesting is the treasury bonds, the treasury, the U.S. interest rate. That move to the upside indicates that they are not going to raise the interest rate. I mean, they don't expect that there is any hike in interest rates. Rather, they're expecting maybe a decline in the interest rates. I don't know what more decline below the zero that we have. But anyway, that's an indication probably that maybe this is the beginning of no fear, if you will. I mean, if they seem, I mean, if I don't know how to really interpret this. If you look, I mean, maybe that's an indication that probably they are expecting some sort of settlement in the between the Congress and the Treasury and the President about the uh, debt ceiling, because that means that the interest rate is going to make, that is, it has reversed. I mean, that means that they are raising the interest rate, and that probably would have, this decline would represent a fear in the market towards the US debt, if you will. Therefore it is, and now we have this rally in the price of, or the cost of, the treasury bonds. That's an indication that now the treasury bond is coming into demand. People are not scared to hold the US treasury, and therefore they are, Saeed, I'm in the room, I'll call you back, okay? And therefore they're buying, and there is demand coming in to buy the US treasury. So that's a good sign. That could be an indication that now they are looking to settle the that situation. If you look at the S&P, the Dow Jones and the S&P, this is the Dow Jones. That's a pretty good move. I mean, that is quite a very good, healthy move. It is a very good close towards the end of the Friday. That is, I mean, if I take the 1254, this is pretty good. I mean, you're looking towards now the 1300 and probably a move higher. If you look at the S&P, I mean, it closed the week at 1341, right above the 1339 and 1338 structure point, which is, again, that is a very strong close for the US equity. This means they are buying the US Treasury, they are buying the US debt. A US Treasury is a US IOU, it's a US promissory note, so they're buying it, and they're also beginning to buy the US stock market. And if you look at the intraday for the stock market, this is when the monthly unemployment came out. You got the sell-off, and then it began to turn around. And what matters to us in this case is the close, and the close is above the 1,340. So even though we had this decline, that is still a positive close, and you can see the major trend is all the way to the upside. So we should be looking for a further move, and that should be supportive of the US dollar. Okay? So what we're having in the dollar right now, from what we have seen over the last several weeks, we have been having these knee-jerk kind of reaction. You get a move right above the structure point, you take about 100 pips or so after the move, and then it turns around and it comes down. So if you take the loss, let's say from May the 20th, above the 75.50, you will get about a move towards the 76, let's say, what's the 76 here, till around the 76.60. So you're getting about, from here, from this point, about 100 basis point move before we begin to see that the dollar is going to lose momentum and it's going to turn back. So the way we should be looking at right now, that is, believe it or not, that is a buy signal so far based on the index and the dollar. I'll be looking to be buying it, and I would be looking to make a decision right after about 100 pips to the upside. I might be giving it a little bit of room because of what I see in the treasury bills, that move that's coming into the treasury bills, and what I see also in the S&P. You can see that the reversal here, that is a buy again coming back into the S&P, and what we have in the Dow Jones. The only concern we have is the gold and the precious metal do indicate there is a lot of buying coming in. Now, with that buying coming in gold and silver, if you look at the Australian dollar, this was our selling point from last week, which is the 106.34. It closed at 106.40, about 10 pips above it. So even though with all the buying that's coming into the gold, we don't really have any good solid move into the Australian dollar, and you don't see the same solid move. I mean, that move in the Aussie and the CAD, you can see just sitting right above, even though that is positive and we're going to respect that. But take a look at gold. Look at this move. It is not represented equally in the Australian dollar nor in the Canadian. But if you look at the Swiss, it is pretty much represented into the Swiss. They are buying the Swiss and they are buying the gold. So our bias is going to be what? You look at the euro, of course, is an absolute mess. It has closed the week below the 142.47 based on the euro index. So in short, we are going to be the weakest one that we're looking at selling it right now. The primary one that is the major seller is going to be the euro. We're selling the euro, and we're going to be, let's make sure we have an understanding about the pound. The pound so far is not, it is weak. I mean, the pound has been a mediocre currency for a very long time. It hasn't been doing anything. So we'll just keep that on the sell side. So the euro is the number one seller. I would be looking to buy the Swiss franc. I would be looking to buy the Japanese yen. I would be looking to be slightly a buyer of the dollar, and I would be keeping the Aussie and the Canadian just to be on the back burner to see what is happening with them, because I really don't have the clear sense. It is sitting, the Aussie and the CAD are sitting right above that structure point. The bias is to the upside, but I really I really need to see that it clears. I mean, this, if you look at this close of 104, 106.47 on the Aussie, that is a sell signal. I mean, believe it or not, it is a sell signal. The trend is still up, everything's okay, but I would be pressuring it to the downside below the 106.47, 106.34, and that close as is a sell signal, okay, because of the failure that we had over here. If you look at the Canadian, it is pretty much, it is similar, but it is not as weak as the Aussie. The Aussie is actually weaker than the Canadian, but both the CAD and both the Aussie are on a short-term sell signal. Okay, so with that, I would be looking to sell on a lighter scale the Aussie, and I will be looking to sell the Canadian, and I will be looking to be a buyer. The first one I'm focusing on selling is the Euro, then I'm looking at selling the Aussie and the CAD, and I will be looking to be a buyer of the Swiss franc and of the Australian dollar. But I will be selective, because if you see the Swiss, see this move in the Swiss, so that move in the Swiss, I want to be selective on that move. So this means I'm going to be taking the Euro Swiss probably as a good candidate. I'm going to be taking the Euro Dollar as another short. So I'm shorting the Euro Swiss, I'm shorting the Euro Dollar. I might, you probably can expect to see some weakness in the Euro Pound. So the Euro as a whole, you can see that it is crashing on the way. So I'll be looking at the Euro Swiss, the Euro Dollar, the Euro Pound. I might look at the Euro Aussie also. So primarily I'm focusing on selling the Euro, and I'm choosing the hierarchy of the strong pairs against the Euro, and I am might be looking at selling the Aussie if I'm taking it against the Aussie dollar. I might be selling the Aussie CAD, and I have to be a little bit cautious about the yen, because the yen is quite in a unique position. Okay, so this is basically the hierarchy of what we're going to be doing for the intraday.